let's take a look now. We're going to go through each of these categories. We're going to look at a few examples and discuss them just to give more perspective and to zoom out a bit here. Let's look at this first stock. Dave, you probably remember this one well, Amgen, of course. This was really clear cut as far as a market leader is concerned, and this is one of the few biotech companies that at the time had strong earnings. Coming out of this base, if you will. And you can see, if you take a look here, let me get my little drawing tool or my little spotlight. There you go. You can see I'm actually buying this. Now, I want to point out another thing here. If you look at these prices, you're going to see prices that are, $1 or 50 cents. These are adjusted for stock splits. So we just taken the price now. These stocks have made big moves. So they're adjusted for stock splits. I wasn't buying. I don't buy stocks that are penny stocks or $1, $2 stocks. These were trading much higher at the time. So ignore the price. These are adjusted for stock splits. But at the time, this stock, we're in a bear market. And I remember I had actually gone to New York, and I was in New York City at a conference. It was the Ned Davis conference. There was a bunch of the newsletter writers there. That was where I actually met Stan Weinstein for the first time. And at the time, Marty Zwag, some of you maybe remember Marty Zwag. He wrote a book, Winning on Wall Street. So they were all bearish. Everybody was bearish. They were saying, we're going to go into a 1970 style bear market. This is going to be drawn out. It's just like it was like the end of the world. Everybody was calling. And I realized that it was just, I couldn't find that one single person bullish. But I saw that, well, first of all, we came off the lows and we had a follow through day coming off the lows. So we had an official O'Neill follow-through day, but what was really getting my attention were there was a bunch of stocks in the medical area, the biotech area, some in the computer and computer peripherals software that were making new highs or very close to new highs coming out of bases. And I started buying a few of these names, and one of them was Amgen coming out here. And you can see the market's just coming off the lows. And at the time, Amgen is up 175%, while the market during that same period is down 35%. So showing this tremendous relative strength. That's what a market leader looks like. And that's why it's so hard to buy them at the most opportune time, because like I said, they're moving into new high ground, coming off the market's lows when you're in a bear market. And sometimes they even break out. If you can see, you came off here and this stock's going into new high ground before the bear market even really, starts really selling off here. So you could actually bought it, over here and coming out of this base, and you went into a bear market at the time, and the stock just kept moving itself higher. But this is where, and David was just saying that they really stick out in corrections and in bear markets. This is why you're going to be looking for the names that are holding up the best. Look for those market leaders because they stand out like a sore thumb at that time.
Yeah, the other thing too about the markets is at this point you're seeing the market has been going down for 4 months, or you could even take it from the October high a year ago. And so by the time you've been going through a very tough market and you can't be making any money, you're just not in the mood for your mindset is, this is so bad. I've lost money. When will this thing ever turn around? The news looks so bad. But that's where you have to you just have to look at the information on the chart, and what the chart is telling you, that it's telling you that this stock is already starting its move, and it's a new market leader. So sometimes you really have to concentrate on what the individual stocks are saying, and not so much the averages, the major market averages.
Now you may be thinking, wow, stock's up 175%, new highs. That stock looks expensive and high, and most of these are trading, like I said before. Remember, I said they're trading at high PEs. They look expensive. Okay, that may look high, right? But then let's take a look here. See, it doesn't look so high anymore, does it? Right, this is where I'm buying right here. So this is what a market leader, the potential of a market leader. And even if you're trading this and you're not going for the bigger move, you get a lot of opportunities to trade this in a very strong uptrend. And sometimes, you can trade. I traded stocks like Yahoo and some of these names that made 7, 8,000% moves, and I was in and out of them, 5, 10, 15 times for a 100% move, a 60% move, a 30% move, and you compound all that out, and and I got a pretty good lick on some of these, even trading in and out of them. So Amgen went up 360% in 26 months. And again, we're looking for, one of the criteria that we want is that we want a stock to be up prior to us buying it. We're going to talk about this later when we talk about the trend and the stage 2 uptrend, but we want the stock to be up at least 30, 40, 50% minimum. But most of the stocks that I trade, and Dave too, they're up 100%, 200, sometimes 300%. Now, here's another thing too I want to point out. Everything that we do, we're basing it off of facts, based on reverse factor modeling the market and what actually has shown to be the statistics and the information that leads to these market leaders. We're not like just pulling these numbers out of a hat or anything that we're doing. It's not from, we have a lot of anecdotal evidence, obviously. David's been trading over 40 years and I'm closing in on 40 years myself. So we've got about 80 years combined trading experience, but still, we're not trading off our opinions. We're trading off of facts. And I'm going to give you a fact right now. The average gain that a big market mover, a big market leader, this is based on the biggest moving stocks going back 100 years, all the way back to the late 1800s. The average gain that the stock made prior to it making its big move was about 350%. So again, this being up 175% is actually way below the average of what many of the market leaders were up prior to making their big moves. So let's take a look. Here's Lumber Liquidators. So this is another stock that was showing tremendous strength while the market was correcting here. It wasn't a big bear market in 2012, but we did have a correction here. And here's the important distinction here. One of the things I love about getting into these market leaders and getting into these stocks that have a very strong relative strength, high alpha, they're in their own world. They're in their own world. They're in their own earnings cycle. And a lot of people talk about leverage. They ask me, do you use margin? Do you use leverage? Okay, I don't use margin or leverage too much anymore. But I did it one time when my account was small and I wanted to lever up. But the leverage that I get, and what I really like to do, is to get the leverage on the market by being in the powerful stocks. So here's a perfect example. You've got Lumber Liquidators, which is holding up, coming out of these, what you would call an ascending base, if you will, comes out of here as a market leader. But the market doesn't even get into new high ground yet, and just starting to turn to new high ground. And this stock's already a double. All right. Now look at here. If we take a look over this period, the market's up, looking at the NASDAQ, is up 33%. Over that same period, this stock is up 240%. See, that's your leverage. That's the kind of leverage that you want. Not leveraging where you're putting on margin, but where you're actually getting the leverage because you're in the stocks that make such big moves. And even on a short-term basis, you can get stocks that are up 20, 25, 30% in just a matter of days or weeks. And the market, during that period probably won't move more than, single digits at most. So this is what these look like. Let's show you something that's a little more recent. DocuSign. So DocuSign is a perfect example of a stock was making new highs as the market's just coming off the lows. And if you remember here, Dave, I don't know about you, but myself, around this time when these stocks started making new highs, and then just a little bit after, you see this gap right here. I know it's kind of small, but this gap, that was a follow through day. And I started buying stocks right there. That's when I started adding stocks. I was scared to death at this time. I got to tell, and I'm not ashamed to admit it. It was like the end of the world, COVID, and everybody was calling for a 1929, depression or even worse. And, of course, the coronavirus was a complete unknown. And you've got stocks that are making new highs. They're breaking out into new highs. Again, if you were to, use your gut or the news as your indicator, you'd never be in this name. And here's the same type of leverage. Similar to the Lumber Liquidators, the market's up about 36%. And in that same period of time, which is only a couple months, the stock's up 120%. So big move. That's where you get your leverage.
Yeah, that was a time where there were 10. I've never been through something that volatile that quickly. In terms of, there were 10% moves on a number of different days where the market was moving, and so much volatility. But again, to not look at the averages and look what some of the individual stocks are doing at their time, they're giving you a different message. They're saying, hey, I'm at the forefront of something that you should really take a look at. And you can see what kind of moves you can have with those types of stocks.
Yeah, unlike a lot of people, and you probably, on Twitter and so forth, and if you're one of our members, you know this all well. I really just follow the stocks. I mean, 95% of everything that I do, my decisions are based on the individual stocks and how they're acting, how the stocks in my own portfolio are acting. And that's why, I never get really caught off guard, either on the upside or the downside, because I'm not looking at the indexes as my lead indicator, because I'm trading stocks. So if the stocks are setting up, and this is something, we go back, we can talk about this with Mark Ritchie later when Mark Ritchie is here. But when this was all happening, Mark Ritchie and I were having a discussion, and I said, he's like, what do we do here? The stocks are setting up, but it looks like the end of the world. I said, we buy them. We buy them. They're setting up, they're breaking out. We buy stocks. If they stop us out, they stop us out. And then we buy them the next time they set up. But we got to buy something here because the stocks are setting up. And, we got a follow through day. So to confirm that the market, even the indexes look like they might have made a low. All right, this is all just perspective. All right. So we're going to talk a lot about this, but we're anywhere near getting into any specific.